Hi, everyone. Thank you so much for taking time today on our annual How Employers Should Handle PCORI Fees. This is for plan years ending in 2024. And if you haven't met with me before, my name is Corbin Granger. I'm a Senior Vice President and involved with compliance here at Town Benefits. So we always put our disclaimer, which is this information can change based on regulatory clarification. And because this law is set to sunset in October of 2029, that may very well happen at a certain point. So what is the PCORI fee? The PCORI fee is a fee imposed, it's actually imposed on all health plans, but the only reason you should be concerned about Form 720 or on the webinar today is if you have a self-insured health plan, which would include an ICHRA or a QSEHRA, or you have a traditional HRA. That's it. If you are fully insured, everything is fully insured, you do not need to be on this webinar. The PCORI fee was established actually to fund an institute in Washington, D.C., which was going to try to provide better outcomes of care. So the fees are due annually on Form 720 by July 31st for the previous calendar year. Not all employer plans are subject to the PCORI fee. You do not need to do anything unless you have a self-insured health plan, and that includes what we call MEC plans, or you have an HRA, or you have a standalone health reimbursement arrangement. And those are called, we call them QSEHRA, Qualified Small Employer Health Reimbursement Arrangement, or one that is growing in popularity, the ICHRA, Individual Coverage Health Reimbursement Arrangement. So unless you have one of those arrangements, you do not need to be on the call today. The important thing is how are PCORI fees calculated? So the PCORI fee is based on what they call the average number of covered lives. And there are 4 ways to determine your average number of covered lives. One of the things that the PCORI fee does, and you're going to see it on the tax return, is they change the amount due based upon when the plan year ends. But it's not when the plan year ends on a calendar year. It's, as you see there, it's $322 per covered life if your plan year ends before October 1st, 2024, so meaning through September 30th, or it goes up to $347 if it ends on or after, meaning October, November, December. And I think that gets kind of confusing because we always think of things in calendar year, but they change it there, that the fee changes every October. So let's talk about calculating the average number of covered lives. First of all, there's the actual count method, and it's exactly what it sounds like. You have to count as an employer every covered employee and dependent for every day of the plan year. This is a really cumbersome method, so we would not recommend you use that. The next one is the snapshot count method, and I actually like this one if your carrier slash TPA provides it this way. So what you're going to do is you're going to take, so you get a membership report or a bill, and it's going to show you everyone who was covered in that month. So it's going to show you the employees, spouses, and dependents. So you're going to take a snapshot, meaning you're going to take either the first month of each quarter, January, April, July, October, second month of each quarter, or the third month of each quarter. And you're taking a snapshot of every single person who's covered. And then you divide it by 4, and that gives you your average covered lives. So I made an example here. You can see it doesn't change much. 50 lives, 60 lives, 55, 55. You add the quarters together, you divide by 4, your average number of covered lives is 55. Because this plan year ends December 31st, 2024, it's going to be the increased fee of $347 or $190.85. Another one that is actually very popular is called the snapshot factor method. And this is helpful when you get a membership report. It might say employee, or it might say self-only, children, self with spouse, et cetera, et cetera. So what you're doing with this method is you're going to take the number of participants that have self-only coverage, right? So they go in as 1. Plus, you're going to take the number of participants with other than self-only, which means, somebody who covers their children, their spouse, and then you multiply that by 2.35. You still use the same number of dates in each quarter, just as I showed you on the other slide, and all dates must fall within the plan year. So let's go through an example. All right, and this is a pretty simple example. So we've got 12 employees with self-only coverage and 10 employees with dependent coverage. And to make this simple, I didn't change the membership at all during the year. So if you have 10 employees with dependent coverage, those are the ones that you're going to multiply by 2.35. So that gives you 2350. You're going to take 2350 plus the 12 individuals with self-only coverage, and that gives you 3550. You multiply that by 4 quarters, that gives you 142 divided by 4 equals 3550. It's a very simple formula in this case. And of course, the fee in this example is $3.47 because the plan year ends after October 1st, 2024. Actually, it ends on December 31st, 2024. The last method, and this one is actually rare because your Form 5500 for the prior year and the PCORI fee are both due by July 31st. But if you want to use this, you can use the Form 5500 method, which means you're basically going to look at the number of participants reported at the beginning of the plan year plus the number reported at the end of the plan year. And you can't use a Form 5500 that required an extension. Now, if you have an individual coverage health reimbursement arrangement, which we call an ICHRA, or you have a qualified small employer health reimbursement arrangement, which we call a QSEHRA, you have special rules, and it's a lot simpler. So if you have an HRA and you have a fully insured plan, you just count the employees that are in the HRA. You're not counting dependents at all. If you have a standalone HRA, so you have a QSEHRA or an individual coverage HRA, again, you're only counting the individuals with self-only. You're only counting the employees. We're not counting dependents, and that's your number. Form 720 is complete. The difficulty is it's a tax form made for excise taxes, and so there's only one portion of the form that covers the fee we're talking about, but we only file this form for the second quarter of the year. So you're going to have page 1, page 2, page 3, and the voucher. So let me go through it. First of all, your Form 720 at the top should say revised June 2025. The quarter ending is not the prior year, it is the current year, because you're filing for the second quarter in the current year. If you file using last year's numbers, they're going to think that you're filing late. So it's going to be June 30th, 2025. On page 2, you have a couple of options, but you're going to go down to, I have it in red here, It's called applicable self-insured health plans. So if you had a health plan that ended September 30th, 2024, you're going to use $3.22. If you had a health plan, a self-insured health plan that ended October 30th through December 31st, 2024, you're going to use the $3.47. And last, when you have the payment voucher, you enter the amount of the payment. You again indicate it's for the second quarter, and you mail it into the IRS, or you can use the electronic payment system if you have that ability. So here's where to file, and you can e-file as well if your company has that option. So it is a relatively simple form to complete as long as you understand the average number of covered lives, and you don't have, even if you don't have e-filing, you can mail it in. The only thing is it's due by July 31st of 2025. And I do see that there are some questions, so I'm going to go ahead and do that. Yes, you will get a copy of this presentation. We also do a recording of the presentation and post it on our website. So yes, that should come to you on Monday. Let's see. Okay. And actually what you're going to get is you're going to get a copy of the presentation, you're going to get Form 720, and you're also going to get the instructions. And of course, your broker or I, we're always here and available to help you. It really is a very simple form. It's almost more time to do the form than, you know, the fee itself. And no, I did not say that. So let me see if anybody else has any other questions. All right. Thank you all so much. I hope you have a wonderful afternoon, and it is a privilege to be of service to you at Town Benefits. Thank you again.